Okay, so I will be sharing to you guys 23 investments today. Hi everyone, this is Charm again and welcome back to my channel where we talk about personal finance, entrepreneurship, and adulting how-tos. A few of the questions I get asked most often are, where should I invest? Ano ba magandang investment? Saan ba ako pwede mag-invest? In today's video, we will be going through all the types of investments and who they are for. Again, if you don't know your goals, your time horizon, your investor personality, then make sure to check this video out first. But if you already know, then we have over 20 investments to talk about today. Just take note that this is not investing advice. I'm merely trying to define or explain to you guys what these investments are. So with all of that said, let's start this video. Okay, so the format of this is that I'm going to explain what that investment is, its potential returns from low to high, and the involvement that it needs from you from low to high, the expected income, whether it is fixed or variable, the fees from non to high, if your capital is guaranteed or not, and lastly, the risk level or for whose risk appetite it is. So I will be making a tier list as well so we can rank whether it is conservative, moderately conservative, moderate, moderately aggressive, or aggressive. So a thing that you have to remember is the rule of thumb is that if it has lower risk, it also has potentially lower returns, and if it has higher risk, then it has potentially higher returns. Okay, so first category are bank products. Let's talk about time deposits first. Time deposits or CDs or certificates of deposit is if you deposit to the bank and it will be locked in for a period of time, and every month or every year you will be receiving interests from that. So I'm going to put time deposits in conservative. So for time deposits, they have low potential returns, low involvement also from you. The expected income is normally fixed, meaning that they would already tell you how much you're potentially getting in interest when you deposit to these accounts. So the fees are none to low and your capital is guaranteed. Second bank product is the high interest savings account or the high yield savings account. So we hear this a lot with digital banks. I'm going to put this at conservative as well because the potential returns are also low. Your involvement is also low. You just have to deposit it. And then the expected income is also fixed. Again, they would tell you already or they would declare that how much the interest is for this type of savings account. So the fees are also again none to low, and yes, your capital is guaranteed. Most banks are insured by the PDIC or the Philippine Depository Insurance Corporation. Next category are bonds. We have government bonds and corporate bonds. Let's do government bonds first. The potential returns are also usually low. The involvement is also low. The risk level, I will put this in conservative as well because most government bonds they have perks like being tax-free or the capital is government guaranteed, which brings me to capital. Yes, it is guaranteed. Your fees are also again none to low. The expected income for bonds are normally fixed as well. They would declare this before you even let them borrow the money. So bonds are essentially when you let government or corporations borrow money from you. So, ikaw yung lender. So, corporate bonds, I would put the potential returns to low to medium. So, it depends on what company you are investing, but the involvement is the same. It's low. The risk level, I would put this in moderately conservative because corporations, companies have a higher potential of getting bankrupt as compared to the government or, a whole country. So just because of that reason, I'll put it in moderately conservative. But it's still pretty conservative form of investment. The expected income is fixed, the fees are none to low, and the capital is also guaranteed. Okay, so let's move on from bonds and let's talk about insurance. So first is annuities or endowments. So they're different but quite similar wherein you are forced to put a savings amount, whether you're paying it gradually or lump sum, and then they would eventually give it back to you either gradually or lump sum as well. So these are normally used towards your retirement so that you have a consistent flow of income coming in. So the potential returns for these are low because it banks on the fact that you will be keeping the amount with them for for a long time because you're going to use it for retirement, right? So involvement also low, risk level also conservative, I'll put this there, and then expected income is fixed. Normally, they would already give you a scheme of how much you will be receiving at a certain point in your life. Fees are low, there are insurance fees of course, and then capital is normally or usually guaranteed. And then next are insurance or VULs, variable unit linked insurances. Potential returns are low to high, and the reason for that is if you are using the VUL or the investment linked portion, I would say that the potential return would be maybe low to medium. But if something does happen to you, especially early on paying for the insurance and you can claim the whole amount, then that's why I put in high. Because if you're paying, let's say 30,000 every year, and on your 5th year you get to claim 1 million pesos because of a critical illness or something like that, then I think you're getting a big potential return for that. So the involvement also low, you just pay your premium and the insurance company handles everything else. The risk level, I'm also going to put this at conservative. Again, I'm talking about the fact that it's going to come in handy if you are going to claim insurance as well. So the expected income is also fixed. So you normally know how much the face value is or how much you're getting in terms of your life insurance or health insurance when you need to claim them. And then the fees are medium to high. So when it comes to insurances or VULs, the fees for the agents, for the company are usually part of that because they are essentially assuming the risk from you. Whatever happens to you, they are going to cover you if it falls within the contract. Capital guaranteed, yes and no. So there are insurances that are like, for example, the term ones wherein you put an amount every year, but those don't really get converted to investment or savings, but they come at a much cheaper cost as well. On the other hand, with VULs or investment linked insurances, then your capital will most probably grow, and in the long term it will probably be equal to what your capital was. If you guys want to know more about VULs or term life insurances, I have a comparison in this video right here, so make sure to check that out as well. Okay, so let's move on from insurances and let's talk about government funds. First is the Pag-ibig MP2. I did a video on that as well. This I will put in moderately conservative because there is a 5-year lock-in period. So parang it's for people who have that time horizon as well. So the potential returns are medium. They have been ranging from around 5 to 8% the last 5 years. And the involvement is also low. Again, you're just putting a certain amount every month, leave it there. The expected income of this varies because, for example, your investments in 2021, they will announce the interest on February or March of 2022. So you will know your growth for your investments are the year after na. Fees are none to low because it's tax-free, but there might be fees when you put in or you deposit money to your MP2 account. So capital guaranteed, yes, it's government guaranteed. So even if you need to pull out your money before the 5 years hit, you'll still get your capital back, but not necessarily the interest. So next is the National Pension Scheme, or in the Philippines, it's the SSS. The potential returns are low to medium, but again, because it is for your retirement, so when you are 60 or 65 years old, then because of compounding interest, because it's like 20, 30 years away, it's still a sizable amount, right? So your involvement is also low. Normally, this is already deducted in your salaries. So I will put this in conservative as well. And then the expected income is fixed. Normally depends on how much you're putting also every month. So fees are none to low as well, and the capital is guaranteed. Next is the Government Retirement Fund, or the PERA, which means Personal Equity and Retirement Account. So the potential returns are low to medium as well. The involvement is pretty low. It is a conservative form of investment. The expected income is also fixed, and then the fees are none to low, and the capital is guaranteed. So let me know, guys, if you want to know more about PERA. Maybe I can make a separate video about them. Okay, let's move on from the government investment funds, and let's talk about the other funds. First is the managed funds. So these are ones that are professionally managed. So maybe they are mutual funds, UITFs, and the like. So similar to what I talked about in the previous video about G-Invest, the potential return for managed funds are medium. The involvement is medium because you have to buy it yourself. So for the risk level, it could be moderately conservative to moderately aggressive. It really depends on you. So I'll put this in moderate na lang. Okay, so expected income also varies. The NAVPU or NAVPS, which indicates how much the unit or share is, changes almost every banking day. So the fees are low to medium. So they have management fees, they have the company's fees and commissions and stuff like that. So make sure to check the fund prospectus for the fees of these UITFs or mutual funds. So the capital is not guaranteed. Make sure to take note of that. And then the ETFs or exchange traded funds are very similar to UITFs or mutual funds, but they can be bought directly from an exchange. So again, First Metrosec, Call Financial, you can buy Philippine ETFs there. They usually mimic index funds, so they are not actively managed by professional managers and thus bringing down the fees. So the fees are low to medium. I will still put this as a moderate type of investment. The potential returns, still medium. Involvement, again, you have to buy it yourself, so medium pa rin. And then the expected income also varies and the capital is still not guaranteed. So you can still lose money with ETFs. I just find that they are cheaper alternatives to mutual funds. Okay, so the next category, trading. The first up is derivatives. Those are for forwards, futures, options, swaps, and etc. Those have higher potential returns and it does require more involvement from you as well. You usually have to study this more. You have to study charts and trading patterns and more technical when you invest in derivatives. And for the risk level, I would put this in aggressive. The expected income varies and your capital is not guaranteed. You can lose a lot of money with derivatives, so make sure to be careful with those. And then the fees are low to medium. There are usually exchange fees or even spreads for that. So derivatives are kind of like betting because you don't necessarily buy the underlying asset when you are trading derivatives, and I feel like that's why it's quite risky as well. So most of the tradings, I kind of score them all very similarly because although they are invested in very different vehicles, they need more or less the same amount of knowledge, technical skills, fundamental analysis skills, and stuff like that to analyze and to buy and to sell and to make money off of these investments. So we have Forex. So again, potential returns are high, involvements are high, risk level aggressive, expected income varies, fees low to medium, and capital is not guaranteed. So Forex is when you trade two different foreign currencies and the highs and lows of these currencies will dictate whether you make money or you lose money in these investments. So you need to study also like how is the economy of these countries are doing, the relationship of those countries, and etc. So yeah, next are stocks and shares. So again, potential returns high, involvement high, risk level aggressive, expected income varies, fees are low to medium, exchange fees, spread fees, etc. if there are any, and the capital is also not guaranteed. So stocks and shares are when you buy a portion of publicly listed companies. You can buy these in brokerages, exchanges, and etc. And normally you have to study these either through fundamental analysis, technical analysis, or both. I have a lot of stock videos already, so make sure to check that out. So with stocks, there are normally two ways for you to earn, whether capital appreciation or through dividends. And the next are commodities. Again, similar characteristics. Commodities are when you invest in metals like gold, silver, etc. or oils or agriculture like wheat and grains and coffee and etc. So when these commodities are more in demand and supply are getting low, that's usually when the prices of these tend to go up. Again, it's very similar. You still have to learn about fundamental and technical analysis. Lastly are CFDs or contracts for differences. So you can trade CFDs for stocks, for forex, forex, for commodities, for cryptocurrency, and etc. But the thing there is you don't actually own the underlying asset. You are basically buying this from an exchange or a brokerage, and they usually have spreads or fees, but at the same time you have the option to times 2, times 5, times 10 your trade, so you can have higher potential returns. So again, high potential returns have high risk as well. So this is definitely an aggressive form of investment. And personally, I don't like trading in CFDs. I like the fact that I own the underlying asset, and I don't like trading with that much power because, it's hard to not trade with your emotions pa rin. So involvement still high, expected income varies, your fees are medium to high, and the capital is also not guaranteed. Okay, so let's move on from trading and let's talk about real estate. So first, we have real estate property. So real estate property have high potential returns. We all know that already, but it also requires high involvement, choosing which real estate property to get, which bank loans to apply for, getting a tenant for your properties. Of course, medyo high talaga yung involvement. So risk level, it's moderately aggressive to aggressive, but I would put this in moderately aggressive mostly because your capital is most probably be guaranteed. Real estate prices tend to go up, so your capital most probably will grow over time even if you get it rented or not. Maganda din that there are multiple ways to earn from real estate, not just with capital appreciation, but there's also through rental, similar to stocks where there are dividends as well. So with real estate property, expected income varies. It depends on your location. It depends on a lot of other things. So I have a lot of real estate videos as well. I'll link the playlist here. And then the fees are medium to high because taxes are quite high when you purchase real estate properties. Next type of real estate investments are REITs, or real estate investment trust. So they are like a marriage of real estate and ETF. You can normally trade them in exchanges as well, but instead of investing it in bonds or indexes or stocks, etc., they are invested in real estate. So normally commercial real estate. And in the Philippines, 90% of their net income from those properties need to be dispersed to the owners or the investors. That's us. So potential returns are medium. Involvement is medium because again, you have to buy them from exchanges. Risk level, I would put this in moderate. Next, your expected income varies. The fees are low to medium, and the capital is not guaranteed, but dividends are guaranteed. So it's a trade-off. So take what you can from that information. So next, okay, so malapit na tayo guys. Last 5 na lang. So next is we have blockchain. First, let's talk about cryptocurrencies. We all know that cryptocurrencies potential returns are high. The involvement is usually high. It's very similar to trading, but I felt like it should be its own category. The risk level, it definitely can be aggressive because it fluctuates in price a lot. The expected income varies. The fees are medium to high because other than just the trading fees, there are also when you deposit money to your cryptocurrency, most probably there are gas fees or generally fees for that, and the capital is also not guaranteed, so take note. And then next are NFTs or non-fungible tokens. I would put this in aggressive as well. It's a very speculative type of investment. The potential returns are high and the involvement is high also from you. Expected income again varies. The fees are also medium to high and the capital is not guaranteed. Okay, so the next category are businesses. We have own businesses and investing in a business that's not your own. So let's talk about own businesses first. Potential returns are high when you have your own business. Profit margins are obviously much higher than what you normally would get from other types of investments, but the involvement is also high, actually very high when you run your own business. The risk level, I would definitely say it's also aggressive because there's a lot of factors to take into account, the feasibility of your business and etc. The expected income also varies. The fees are medium to high because setting up a business has a lot of registration fees before you even make any money, and the capital is not guaranteed. Next is being a business investor, whether you are lending or you're buying shares from startups. The potential returns are also high. The involvement are low to high. It depends if you are just a capital investor, like you just give out money, or you are handholding a startup as a mentor. It really depends. So I'll put this low to high. The risk level for this, I would put this in aggressive, because you are taking a chance when you are investing in startups, even if it's not the first round of investments. And since they don't have a lot of track record with them, they can definitely tank. So expected income also really varies unless you have a set contract in place. This is usually when you are lending money. And the capital is also usually not guaranteed, because again, they could go into bankruptcy anytime. So of course, we don't hope for that, but yeah. And then last but not the least are collectibles. So this includes artwork, shoes, bags, antiques, cards, etc. So it really depends on that particular community, and usually they dictate whether there is value in something or not. Like for example, Pokemon cards have a lot of following, designer bags, really unique shoes. So they're quite speculative as well. Potential returns can be high. It depends, especially if you know what you're doing. The involvement is also high because you have to immerse yourself in that world. Like, how would you know this action figure or whatever has a lot of value if you're not very familiar with that industry? How would you know if it's real or fake, etc., right? So you really have to learn a lot of things about that community if you want to invest in collectibles. Risk level, I would say that this is moderately aggressive, because although they could really tank and not have any value, a lot of people also invest in these things because they personally like having these items, even though they don't really plan on selling these. So yeah, I would put it in moderately aggressive. Even if it tanks, if you like keeping them anyway, why not, right? Expected income also really varies. The fees are low to medium, and the capital is also not guaranteed. And yeah, those are all of our investments for today. I hope that you found new knowledge and you found this valuable. I hope that you guys will use this video as a stepping stone for you guys to research more about the investments that I talked about. I can't talk about them too much because it's going to be a few hour-long videos. I have videos on a lot of the investments that I talked about today. I'll put my investing playlist up here so that you guys can browse through. But yeah, if you guys heard an investment that I talked about today that seemed to fit with your time horizon, with your risk appetite and your goals, then definitely check them out more. And of course, share this video to your friends and families, because a lot of people think that investing is just stocks or cryptocurrency. Those are the two investments that people think are just available for them, and those are quite aggressive. So make sure you know the spectrum of diversifications also when it comes to your investment platform. So if you like this video, make sure to hit the thumbs up. It really does help out the channel a lot. Subscribe to the channel if you haven't already, and of course, ring that notification bell to get notified every time I upload another video. And again, this is Charm, and I will see you in my next video.